Welcome to the Capital Markets. I am boosting them off. Let's get the show started. Listed International Breweries PLC is offering 18.266 billion ordinary shares at 10 naira per unit, looking to raise a record 165 billion naira, the largest ever rights offering in Nigeria's market history. The Osun-based brewer of Budweiser, Trophy, and other products has grown to become the #2 brewer in Nigeria, according to analyst notes released during the week by Chapel Hill Denham. IBPLC wants to apply the 165 billion naira to reduce its balance sheet, cut its interest burden, and have more flexibility to speed up on its growth strategy. International Breweries PLC is largely owned by AB InBev of Belgium, the world's largest brewer. In the insurance sector, consolidation continues towards June 2020 regulatory deadline. African Alliance Insurance PLC is seeking shareholders' approval at December 20th meeting. The insurance wants to amend its articles of association to cancel the entire 1.83 billion ordinary shares previously held by Conal Limited on behalf of the company and Universal Insurance PLC. The cancellation of the 1.836 billion shares will reduce the total issued shares of African Alliance Insurance from 10.2 billion to 9.374 billion units. The share premium account of the company will therefore be reduced by 2.75 billion from 14.36 billion naira to 11.610 billion naira, reflecting the cancellation of the premium of 1 naira 60 kobo recorded on the warehouse shares. Reduction in share premium account and the total shares will now help African Alliance Insurance to restructure its balance sheet by reversing the impairment on its P&L account by 3.673 billion naira, bringing the company's total loss to 25.267 billion naira. In the week under review, the earnings bird was scanty. FCMB PLC announced a weak 9 months numbers, and small cap Cotex PLC released the second quarter for the period ended October, while FTN Cocoa Processing released a number of earnings that have been delayed from the fourth quarter of last year to the third quarter of this year. That's in the news for the current market week. But as we now begin to wrap up the year, we're taking a look at the stock market in 2019. We're taking the market segment by segment. So let's get a bit of a sense of where we are in the year outgoing. The market has seen about 14% negative readings. Some of these tables we're bringing to you from Financial Derivatives Company. That's the market. Give you a snapshot. It's been a very bearish dominance in the year that we're finishing in about 2 weeks from now. Market sentiment had been largely negative. And again, you can see some of the 5 underpinning issues that were listed there. If you look at the chart on your the right side, you can see the listings of MTN and Airtel, which failed to lift the market significantly out of the doldrums. Now, if you go by sector performance, the banking sector remained the highest gainer in the month of November, which was a step away from the previous months. But consumer goods recorded the highest, the worst performance year to date. And you can see how that was tabled out for you on the right side there. You can see the green shoot and the red shoot there. So what were the top 5 gainers and top 5 losers since the year started? These are the numbers from Financial Derivatives Company. On the right side of the screen, you can see the top 5 losers. 2 of the listed brewers, International Breweries, that's raising 165 billion, has lost nearly 70% since the year started. Guinness Nigeria is down about 60% in the year. But if you look at the green shoot, that gives you an idea of the small caps that had been the major gainers in the year. Cornerstone Insurance, C&I Leasing, Champs PLC, Thomas Wyatt, and BOC Gases. If you just take up the... so what are the picks, stock picks, as far as FDC is concerned? So they pick Access Bank, GT Bank, MTN, Lafarge, and Nestle. Looks a bit like a diversified portfolio. Let me ask Rotimi Fakaijo, who is a chartered stockbroker and market expert, who is sitting here in the studio with me, a few questions on the year so far. Rotimi, it's good to have you. Good evening.
A pleasure.
What's your take? I'm sure you've seen that snapshot of how the market had been so far. Is this significantly different from your view of the year under review?
Well, for what you have put up to the entire viewing public, I think it's a fantastic review, portraying what actually has transpired in the market in the last 11 months. And I believe strongly that these figures are not what anyone would have expected right from the beginning of the year. And if it is the way we are seeing it right now, then definitely there is not much hope before the year ends. What I'm saying in essence is that if the OSHA index is standing at 14.56 negative as at 6th December 2019, then I don't think there is any much there is much that can be done in order to assuage the market back to positive.
Little magic. So, but again, if you look at the 5 key negative sentiments which were there, and if you just put that back on the screen, earnings release had not been fantastically okay this year. So if you talk about the earnings, inconsistencies in policy making, uncertainties around structural reforms, do you think the economy as a whole had impacted the market more in 2019 than, and the earnings had been major? Which was your peak here?
Well, I think for me, the earnings, I believe they are fair to an extent. But what we've seen in the market is the general economic performance of Nigeria. The perception of the Nigerian economy outside the space of Nigeria is not encouraging at all. And we've seen a lot of flight of capital from the capital market, both the equity market and the money market, as a result of foreign portfolio investors not having the kind of confidence that they've been having in time past. So that alone has impacted more on the market than actually the earnings. For the banking sector stocks, I believe a good number of them were still able to upkeep the position they were, and some even improved to an extent, except for the consumer goods, which is not really encouraging. Given what we see in the industrial goods, I think that sector too is not bad at all. Although for Lafarge WAPCO, Lafarge Africa, what we are seeing there is not impressive. But I think all in all, I think for earnings, the market is still quite okay. But for the general economic performance, is really bizarre.
But do you think the consumer goods earnings reflect what everyone is talking about? There is no money in town, to use a local parlance, in terms of, because this is where food, beverages, household, and things like that, that's where it begins to reflect the level of what we call the level of poverty and all of that. Do you think the companies listed on the exchange in that space are beginning to reflect the broader economy?
Absolutely, because if you look at the revenue in terms of turnover, I think we are seeing it going southward. And that also shows that even as some of the products have increased in prices, yet is not translating to an increased revenue generation for those respective companies. And as such, it reflects that the consumption of locally produced goods, or even such goods that are imported, is not what it used to be. For instance, if you look at the stable of Unilever products, you realize that some of the products, though being marketed by Unilever Nigeria, some actually come from Cote d'Ivoire, some come from Ghana. And even at this, they are still recording weaker turnover. So I believe strongly that the economy is very, very weak at this time. People are struggling to get by life. And if things should continue this way, I don't see how the impact on the capital market will not continue to be the way we are seeing it.
We came out of the Q1 general elections, and folks were looking forward to a very active year. The elections hadn't been successful, despite all that transpired. Then the news of MTN listing and the hearsay about Airtel listing came through, and folks thought this will be the game changer for the year. It didn't really turn out to be so.
Well, I think to an extent, in terms of listing, in terms of increasing market capitalization, as such, when they were listed, we saw some impacts. But thereafter, the effect of other securities actually losing prices and capitalization dampened the effect of the new listings that we saw.
The MTN and Airtel.
Exactly. I think for MTN, at least we've seen some activities quite very much on that. For Airtel, I believe is as good as just adding to the capitalization and not to the activities in the market. Because in a week, you could see it may not trade more than 10,000 units, which is not even enough to actually affect price in any way. And I believe strongly that with the way things are, if we have more listings and the existing listings continue to go down, then we won't see much of impact. But for the year so far, I think to an extent, in making efforts to get new products listed on the exchange, the stock exchange has tried so much, at least they've made a strong mileage. But in terms of the general performance of the market, I don't think there's really much to sing about as present.
There is one sector of the market and of the economy that historically do well, whether things are good or things are not so good, and that's the brewing sector. Folks says Nigerians drink whether they're in happy mood or they drink to keep the sorrows away. Surprisingly, the brewery sector is not fantastic so far this year.
Yes, and that also presses home the point that the economy is very much unhealthy. But again, if you look at the numbers being churned out by International Breweries PLC, we are seeing an increase in their turnover, the top line, but it's not translating to the bottom line. But when you look at Nigerian breweries and Guinness, I think for the top line, it's going downward, the bottom line, same. So the gain in turnover, the loss in turnover by Nigerian breweries is a gain for international breweries, but most unfortunately is not translating to return on investment for international breweries shareholders. So I think the performance of the market and the performance of the economy, they're like Siamese twins that cannot be separated. So if one is unhealthy, especially the economy, then definitely we cannot expect the equity market to be healthy, to be healthy or strong in any way. So what we are seeing at every point in time shows that the Nigerian economy has a lot of problems.
So what's your outlook as we wrap up the year? Technically, we'll finish the year double digit, perhaps single digit in the negative territory. So you folks who are traders and analysts will say, well, investors say, fine, okay. But again, what's your outlook for 2020?
Well, I was looking at the performance very early this morning, and what I saw wasn't really encouraging because I see the market in a cycle. Goes down 2 years, comes up strongly in another year. We saw it happen in 2015, 2016, 2017, and at the end of 2018, we saw the market bouncing back. 2017, we saw the market bouncing back. Then 2018, it goes on again. 2019, we're where we are. So with the way it is, there's every likelihood that things may begin to look up in the year 2020, but it's not sacrosanct.
Very, very interesting. If we go by the 2-year cycle, maybe for this not so fantastic year, maybe 2020 will bring something that will help the market, that will lift the market. Where would you see that from? Market Street or from the government side?
Well, I think maybe with the early passage of the 2020 appropriation bill.
Okay.
That alone, I think, is going to give a lot of succor and comfort to investors in the year 2020. So things are going to get started very early. We already know the direction of the budget, and that alone people can plan. But in a situation where in the time past, in June, the budget is still yet to be passed or still yet to be implemented.
So the budget is
the early
a
passage
plus.
is a plus, and I think it's going to be one of the boosters for the 2020 economic outlook.
Rotimi, thank you so much. Rotimi Fakaijo is a chartered stockbroker and a market analyst. Let's take a break. We'll review ETF's markets for the year. That's what's coming next.